It's above all a matter of national security.
President Donald Trump surprised countries around the world last week by announcing he would double tariffs on metal imports.
What if I told you that the United States, once the world's powerhouse in mining and raw materials, is now watching its mines fall silent, its workers laid off, and its factories scrambling for supplies, while Canada quietly takes control of the global mineral market? And the fallout could change America's economy, its security, and even its place in the world for decades to come. Welcome back to Us Finance Wire, where we break down the stories that matter most to America's future. Today, we're diving into a shocking economic earthquake. How the United States, after imposing tariffs on critical minerals, has triggered a wave of mine closures, soaring commodity prices, and a massive power shift that leaves Canada in the driver's seat of the global mineral industry. Before we dig in, make sure you hit that like button and subscribe. It helps us bring you deeper analysis of the stories reshaping America's economy and keeps you ahead of the curve. The mining collapse. A nation at a standstill. Breaking news from Washington has shaken the country. President Donald Trump, furious over foreign competition and determined to protect America's so-called bedrock industries, doubled tariffs on imported metals, including copper, nickel, coal, and rare earth minerals. What began as a bold gamble to revive U.S. mining is now backfiring spectacularly. From the copper belts of Arizona to the coal towns of West Virginia, mines that have powered America's growth for generations are shutting their gates. Rail cars sit idle. Processing plants are going dark. Thousands of workers are bracing for pink slips. What was supposed to be a policy of strength has instead created a wave of silence across America's industrial heartland. Meanwhile, Canada, long one of America's closest allies and most reliable suppliers, is moving swiftly to seize the opening. Canadian mining firms in British Columbia, Ontario, and Quebec are redirecting exports to Europe and Asia, filling contracts that used to go to U.S. buyers. And in the process, Canada is positioning itself as a global leader in minerals, while the U.S. struggles to meet its own domestic demand. The ripple effect across America. The shockwaves aren't confined to mining towns. They're spreading outward, shaking the very foundations of American manufacturing, energy, and even national defense. In Arizona, copper mines that once produced the lifeblood of electronics, power grids, and defense systems have ground to a halt. Without copper, the entire supply chain, from car factories in Michigan to renewable energy projects in Texas, is at risk. In West Virginia and Wyoming, coal shipments that feed steel mills and power plants are frozen. In Nevada, rare earth extraction sites, once touted as America's best hope to reduce dependence on China, have scaled back production. The reason? Costs are soaring, markets are uncertain, and the flow of Canadian minerals has been cut off. Manufacturing states like Michigan and Ohio are next in line for the shock. Automakers, electronics producers, and turbine manufacturers are warning of shortages. Rare earths, essential for everything from smartphones to fighter jets, are suddenly in short supply. And without those inputs, American innovation itself is at risk. Commodities surge, consumers pay the price. Wall Street is feeling the tremors too. In Chicago and New York, commodity traders are watching prices skyrocket. Copper futures are at record highs. Rare earth contracts are trading at massive premiums. Coal spot prices are surging. And when raw material prices go up, everyday Americans pay the bill. Electric cars, home appliances, smartphones, even basic power tools, all are becoming more expensive. Home builders warn that copper wiring, plumbing, and HVAC systems will add thousands to the cost of new homes. Renewable energy projects face delays, threatening the transition to cleaner power. Even the Pentagon is scrambling as defense contractors warn of bottlenecks in missile systems, radar, and stealth technology. The bottom line? Inflation is back with a vengeance, fueled not by consumer demand, but by shortages of the materials that make modern life possible. The human cost. Families in crisis. For mining communities, the crisis is deeply personal. In towns like Ely, Nevada, and Gillette, Wyoming, families are now asking how they'll pay their mortgages or afford health care. In Arizona's copper towns, the mood is darker than even the 1980s bust years, when entire communities were forced to leave in search of work. Local diners, hardware stores, and car dealerships are already seeing fewer customers. Schools in mining counties warn of budget cuts as tax revenues collapse. For families, the shutdowns are more than temporary, they are life-changing. Politics and pressure in Washington. The political fallout is just as explosive. Governors from affected states are demanding relief, calling for temporary tariff suspensions or federal subsidies. Members of Congress from both parties warn that the U.S. is ceding strategic ground to Canada and other suppliers at a dangerous moment. Yet the White House insists tariffs are necessary to protect U.S. industries from foreign manipulation. It's a standoff that has turned one of America's closest trading partners, Canada, into a competitor almost overnight. Canada's big opportunity. While the U.S. struggles, Canada is thriving. Mining trucks in Sudbury, Ontario, rumble day and night. In British Columbia, copper concentrate is loaded onto ships bound for Asia. Canadian firms are signing long-term supply deals with Europe, Japan, and South Korea. And thanks to trade agreements like CETA and CPTPP, Canadian metals often ship tariff-free, giving them a cost advantage U.S. producers can't match. Canada has been preparing for this moment for years. Investments in refining capacity, environmental standards, and trade partnerships are now paying off. With U.S. supply constrained, Canada is not just filling the gap, it's cementing itself as the go-to supplier for the world's most advanced economies. Global consequences, alliances and power shifts. This isn't just about economics, it's about geopolitics. Critical minerals are the backbone of national defense, renewable energy, and advanced technology. Whoever controls supply chains holds real power. For decades, the US and Canada worked as partners, sharing resources across the border. Copper from Quebec might end up in Detroit cars. Rare earths from Nevada could be refined in Ontario. That integration built stability. But tariffs have shattered it, forcing global buyers to choose, and many are choosing Canada. The result? A subtle but profound shift in global alliances. Nations seeking secure mineral supplies may now turn toward Ottawa, not Washington. And that weakens America's leverage in everything from trade negotiations to defense cooperation. The long-term risks for the US: every month, America's mines stay quiet, Canada gains ground. Buyers lock into long-term contracts. Ports expand. New smelters open. And once those systems are in place, they don't disappear, even if US tariffs are lifted. Meanwhile, demand for minerals is only increasing. Electric vehicles, solar farms, wind turbines, smartphones, they all require copper, nickel, and rare earths. If the US remains dependent on imports, rising costs will fuel inflation, erode competitiveness, and undermine national security. Some warn this could spark a slow erosion of America's industrial base. First, mining jobs vanish. Then, manufacturing follows. Eventually, even innovation risks drifting overseas, tied to countries with more reliable supply chains. The clock is ticking. So what happens next? There are two paths forward. 1. Confrontation. The US doubles down on tariffs, hoping to force a revival of domestic mining. But in doing so, it risks permanent decline as Canada and others take over global markets. Second, cooperation. Washington and Ottawa strike a deal, easing tariffs, rebuilding supply chains, and investing in joint refining projects. This could restore balance and keep North America competitive against China and other rivals. Which path will America choose? That's the trillion-dollar question. Final thoughts. The silence in America's mines and the roar of Canada's trucks tell the story of a continent in transition. The outcome will shape not just the price of copper or coal, but the future of America's economy, its alliances, and its global power. This isn't just a mining story. It's a story about the choices America makes and the price it pays in a world where resources are power. And don't forget to like and follow US Finance Wire for more insights on trade, farming, and America's financial future.